where is regulation in DeFi going? Is that okay with everyone? First topic?
Sure.
Okay, good. How do I know if I'm on stage or not?
We are.
Oh, is everyone listening right now?
Mm-hmm.
Oh, okay. So I'm live. So
Yep.
awesome. Can I see where the people are?
No.
Okay. All right. Let's begin. Thank you, everyone, for joining us at FO 256 2021. We're going to talk about regulation on this panel and where things are headed. And I'd like to introduce our esteemed panel. And we'll go kind of across the screen based on my my view of the screen. So I'll ask everybody to introduce themselves briefly. I'll start off and just introduce myself. I'm Phil Liu. I am the Chief Legal Officer at Arca. I'm also a co-founder of the firm from a few years ago. We started this in May of 2018, and it's been a fun and enjoyable journey so far. My background is in traditional finance, and I've been doing this for 20 plus years. So kind of got into crypto 3 years ago, and I have not looked back ever since. So with that said, let me start with Colleen, and if you might give a brief intro for yourself.
Sure. Hi, I'm Colleen Sullivan, co-founder and CEO of CMT Digital. We trade in the global crypto spot and derivatives markets on both a centralized and decentralized basis, and we also invest on a venture basis.
Great, thanks. Rebecca, if you wouldn't mind, would you make a brief intro for yourself, please?
Yeah. So my name is Rebecca Rettig. I'm general counsel at the Aave companies, which is a group of software development companies that develops blockchain-based software. The Aave companies developed the Aave protocol, which is an open source, decentralized liquidity protocol on Ethereum that allows for the supplying and borrowing of crypto assets and earning interest on those assets.
Great, thank you, Rebecca. Mr. Boiron, Marc Boiron, please.
Hi, I'm Marc Boiron. I'm general counsel at dYdX. We've developed a derivatives protocol that is non-custodial in nature, but still has a order book type model, which is a little bit different from kind of what you see in other decentralized exchanges. Prior to joining dYdX, I was a partner at Manat in the financial services group and have been in crypto for about 4 years.
Great, thank you, Marc. And last but not least, Marvin Ammori.
Hi, I'm the Chief Legal Officer of Uniswap Labs. We are a software company that builds protocols, including the Uniswap protocol, which is an automated market maker for the decentralized exchange of crypto assets on Ethereum. And my background is primarily on the tech side of fintech, working with internet companies for about 15 years.
Great, thanks. So I thought what we could do is we came up with a few topics amongst the panelists, and we would try and cover as many as possible. We probably won't get through everything, but we'll get everybody's on the panel to share their thoughts, and then to the extent that there are relevant questions that come in, we can answer them, and we'll leave a little bit of Q&A at the end. So the first topic we're going to talk about is where is regulation going for DeFi? What are your thoughts on current developments and how they kind of affect your particular projects, if you can speak about it, and in particular also the industry in general? And why don't we start off with Colleen, if you can share your thoughts, and others on the panel, please feel free to kind of jump in. I want this to be a little bit of a free-flowing kind of discussion. Awesome.
Great, thanks, Phil. And I'll let Rebecca give the overview sort of on where we stand with FATF. I will, address the question on how it affects us. So CMT Digital, all of the trading that we do is done on a proprietary basis, meaning that we're managing our own capital from a trading standpoint versus acting as a third-party fiduciary. And in that context, we are able to engage in the DeFi ecosystem and take more risk than may be suitable for third-party capital. But I'm going to let Rebecca give the overview of what's happening, and then maybe we can go from there.
I think regulation of DeFi is an extremely expansive topic in general. We could probably spend the entire conference speaking about it, but I'm sure everyone doesn't want to do that. And a lot of us in this group talk about it a lot in general. Given that DeFi is, decentralizing and disintermediating new, different, and in some ways traditional financial products, there are lots of different types of regulations that could potentially touch DeFi depending on where on the spectrum of decentralization a project or a protocol may sit. I think to just talk about what Colleen referenced with the FATF guidance, back in March, the Financial Action Task Force, which is a group of countries from around the world who deal with financial regulation, got together and put out an updated set of guidance about how to think about regulating VASPs, which are virtual asset service providers, and VAs, or virtual assets. And one of the things that the guidance appeared to do was to expand out the definition of VASP from its traditional concept of having financial custodians handle the just be regulated by FATF and their guidance, and which requires lots of different types of registration, conducting KYC and things like that, and also sort of bringing software developers into it in some way, shape, or form. Currently, the guidance is pending and has not yet been accepted. If the guidance does get accepted, it is not necessarily a requirement for FATF countries to implement it or to implement the full set of guidance. And so what I think everyone in the industry is working on here and now is to talk to different regulators who are maybe subject to FATF guidelines. So in the US, it will be FinCEN and the Treasury Department to see where they're really sitting with it. But I think from a general perspective, and I'll let Marvin and Marc talk about this too a little bit if they want, but I think one of the biggest concerns right now with DeFi is the concept of KYC, AML, who's interacting with whom in the protocols, and is there anything to do about it? So.
I mean, the thing I'd jump in and sorry, Marvin, do you want to hop in?
I can go ahead. We're all good friends here, so we're all going to stumble over letting the other person speak. I think big picture, DeFi is something that people want to use, and the Uniswap protocol sees over $1 billion in volume every single day, right? Aave, dYdX, these are all very popular protocols. People are making money through providing liquidity or lending, and it's a useful service, and they're doing something that they could have done through a centralized intermediary without that intermediary, right? What DeFi does to intermediaries when it comes to these financial products is what Bitcoin did when it came to payments. And we've seen this before, where when people want something and the law is confused about how to deal with it, essentially that technology ends up winning, right? And so Uber came along and people couldn't tell, is this like a cab? What is this? And eventually people wanted Uber so badly that the law caught up. YouTube, there was a moment where it seemed like YouTube was illegal, right? Viacom sued YouTube. And in the end, right, people wanted YouTube. People wanted to be able to watch TV on their computer. People want to be able to trade assets, lend assets in a non-custodial way where they hold it and they reduce the risk of centralized parties being hacked or information being stolen. So, we've seen this pattern before, even in crypto. When Bitcoin came along, people thought, oh, this is only used by drug dealers on Silk Road. Turns out it's now an investable asset class, according to Goldman Sachs and everyone else, right? We saw, when Ethereum came along in 2015, people thought it was a security the way it was sold. Now it's everyone agrees that it's not a security, it's tradable all over the place. It's an investable asset class, and its technology is the backbone for DeFi and a decentralized web. And we've seen this pattern over and over. And I think DeFi is just going through that moment where there's an overreaction by government, but the benefits are so overwhelming that, if the question was, where is DeFi regulation going? It's going to go to a good place, right? At the moment, it's like, some confusion among regulators, but I just don't see it. I don't see the regulators not getting comfortable with something that has all these benefits that people want to use.
Yeah, the color I'd add to what Marvin said, because I agree with that 100%, is that, not all DeFi protocols are created equal. And I think regulators are going to differentiate between DeFi protocols and not based on necessarily the protocol specifically, but what they end up looking like. So, you've got some DeFi protocols that have levels of centralization that may be very, very high. You've got others that are completely decentralized. Uniswap's probably the best example of a protocol, a DeFi protocol that truly is just a protocol. And I think when you're talking about a DeFi protocol that is really just a protocol, it should probably be regulated in the way that you regulate other networks and protocols right now, which is generally a pretty light touch. I think when you see a heavier level of centralization, you start kind of creating the same risks that exist when you have intermediaries that are regulated. And so for regulators to say, hey, we regulate intermediaries this way, we shouldn't touch, DeFi intermediaries in the same way, probably isn't going to exist. So they're probably going to end up getting treated the same. And frankly, the truth is there's a push in the entire industry. I think it's the goal in general is to be able to have DeFi protocols that are truly decentralized. And with time, we see more and more getting to the point of complete decentralization. And I think that helps kind of lead the industry forwards, as well as kind of, frankly, causing a headache for regulators, but also causing them to realize, okay, well, there are some benefits to the decentralization that we don't get with centralized intermediaries.
Yeah, thank you all for giving your thoughts on this. My personal view on DeFi regulation is that we're going to get to a place, at least in the short term, where I think the regulators are really going to try and focus on the bad actors, and for those that truly just flout the law, where it's totally obvious. But I agree with all our panelists. I don't think DeFi is going away. I don't think there's any sort of regulation that can stop this movement towards decentralization of finance. But where I do think that we as an industry kind of need to solve for are these kind of hacks that kind of appear and people lose their money. And so far, a lot of the protocols have just made up for it, and they're flush with cash, and they can do that. But there's going to come a time where there's going to be a big loss, and how the industry or the particular project deals with that is going to reflect how the regulators are going to react. So that's my comment on that one. Let's move on to the next topic, and I will introduce the topic of the Coinbase listing and how maybe that has given us some regulatory clarity on what the regulators, such as the SEC, views tokens and crypto. For some of us, including myself, I was actually a little bit skeptical that a Coinbase listing would actually be possible, but yet here we are, and that's definitely a positive for everyone, especially the founders of Coinbase and the venture capitalists that invested early. But I also think it's a win for the industry. But what did we learn from that? That approval of the SEC's approval of that particular listing. And if you don't mind, Rebecca, do you want to start out if you have any thoughts on that, and then we'll let the panel jump in?
I think one really big takeaway from the Coinbase listing is that it's actually the point that Marvin was making, which is crypto is becoming very mainstream. Obviously not in the, same way that we have like the legacy financial architecture and infrastructure, which has been around for decades. But I think that there is an understanding and acceptance, at least certain types of crypto from the SEC is becoming mainstream and can work in today's society with today's infrastructure. So I think that's one big takeaway from it. The rest, I'll let others chime in terms of their thoughts on it.
Yeah, Phil, real quick, the comment you made about Coinbase employees and VCs, I think is an interesting one and does tie right back into what we were talking about with DeFi, in the sense that with DeFi, there are no accredited investor standards. It's open to everyone and anyone. Whereas with Coinbase, regular investors couldn't get in until the valuation started at 80 billion. So I think that's an interesting point to note right there. But with respect to the offering itself, I think that it's great for so many reasons, including transparency. But I don't view the direct listing as a blessing from the SEC, saying that all of the assets traded on Coinbase are necessarily commodities and not securities. And I think that's especially so under Chairman Gensler, who actually used the term investment contract tokens on CNBC 2 weeks ago. I'd like to think practically, though, that Coinbase is in a different place with the SEC, where the SEC wants to work with Coinbase. And Coinbase obviously has policies and procedures internally in place to determine what assets it believes are suitable to list. I also believe, they've filed for an ATS, which hasn't been approved yet. So at some point, they will have a platform to trade regulated or securities, digital securities. And of course, if something happens like the SEC's case against Ripple and Coinbase determines that an asset is looking like a security, it can delist it.
I have like a slightly more skeptical take on this, which is simply that the SEC was able to do what it's not able to do with ETFs. And specifically, that is, it's not their job to look at a company and say, hey, your activity itself is activity that we don't like that you are undertaking, right? Their job is to look at that and say, have you made all the disclosures that you're required to make, right? And Coinbase made disclosures around the risks related to the digital assets that they list. And that is what they are required to do. And it's not the SEC's job to say, we like this company and what they do, and we don't like what this company does. We could talk about that more if we talk about ETFs. But to me, that's really it, is the SEC did its job in terms of make sure the disclosures are there, and that's it.
Maybe. Although the one thing I'll say is I think we all know that Coinbase and the SEC has been in talks for long periods of time, for years and years. And while I do think that certain arms of the SEC don't talk to each other, and maybe your view is that they didn't talk to each other on this, and I agree it's a disclosure-based issue, it takes a little bit of a leap of faith for me to think that there wasn't at least some internal discussion among the various divisions in the SEC before this was approved. But I could be wrong. You're probably right.
To me, I guess, big picture, I look at Coinbase and I think Coinbase is not the biggest exchange in the world. It's not the biggest centralized exchange in the world. That is Binance, correct? Like 5 times bigger, in terms of the volumes, as I understand it. And I'm not sure exactly why that is, but I think regulatory arbitrage and or just regulatory clarity, right, is something that probably held Coinbase back, right? Coinbase, as I understand it from the papers, is now doing much more lobbying. They just hired the head of Goldman Sachs' lobbying operation. And I bet they're going in there saying, hey, our competitors around the world had free reign, or at least had free reign, and we at Coinbase didn't even have certainty. We weren't even told what we can do and couldn't do. We're waiting for our ATS to be approved. We're waiting for all this stuff. And this when I look at Coinbase, I think that that's an amazingly run company. And what's holding it back to some extent was American regulators' lack of clarity and ability to keep up. And we've seen, I think, similar things with New York, right? The laws that New York adopted that have kept a lot of the top companies in crypto, rather than them being in New York and in Silicon Valley, like internet companies that I'm used to. Most of them are abroad, right? Rebecca's company is abroad, and it's one of the greatest DeFi companies. Ethereum. Began in Switzerland, though a lot of the co-founders are American and Canadian. And so to me, the story of Coinbase being listed, great. The fact that we're excited that they even got to be listed just shows how far back our regulations are from where they need to be for us to compete globally.
Great. Great. Well, thank you all for your comments on that. I'll cap it off by saying that I think the regulators are slowly getting it right. It's baby steps. I think that eventually we will have a regulatory regime that is fair for this industry. Coinbase is a step in that direction. We're going to get there. It might take a little while, but hopefully not too long. A little while in crypto land is not that long a time, but hopefully we will continue on the march on that path forward. So thank you very much for all that. Let's move on to the next topic. Tether. Okay, so Tether. How important is Tether to our ecosystem, and recent developments on Tether, especially the settlement with the New York Attorney General or DFS, and how in terms of attestations and all that for those who are not familiar, and how do we think Tether's importance in this space is, and whether it presents a systemic risk. I will say that they came out with an attestation report recently that showed that a lot of their assets are actually backed by commercial paper and kind of other things that aren't exactly dollars in the bank. So the market kind of just shrugged, to be totally candid, right? So there was virtually no reaction to it. I think that caused a lot of chagrin to the detractors of crypto and of Tether in particular. But we continued to move on as if really nothing happened. But yet, they're a massive market cap. I don't know what it is exactly today, but if it turned out to be, if Tether turned out to be a gigantic, I don't even want to use the F word, but the gigantic fraud, it would obviously have a massive effect on this industry. But again, no effect. So thus far, so I would like to hear what you guys all think of Tether, how important it is to your project, and whether this is a systemic risk from your standpoint or not. Because we also have other stable coins out there. We have USDC, which is has grown substantially in the 3 years or so that it's been in existence. So to kick this discussion off, I'll ask Marc if you wouldn't mind sharing your thoughts on that, and then everybody else, please jump in.
Sure. I think there's always been a lot of Tether FUD, and the truth is, like, right now, the impact of Tether and the risk to the market, I think, is, in my opinion, everyone talks about it as being huge, but I think it's small especially compared to what it used to be. I think there used to be maybe some meaningful risk around Tether if you go back like 4 or 5 years. Like I think that might have existed. I think, with the rise of USDC, I think USDC has a $20 billion market cap. I think Tether is around 60 or so. I think it becomes less important, having something like Tether because USDC exists. So when you look at okay, then why is it that Tether, around which there's a lot more uncertainty, has the market cap that it has and USDC doesn't? And I think the simple answer is liquidity. Traders have always wanted, liquidity, and they have liquidity in USDT. But on top of that, maybe more importantly, is internationally, access to Tether is a lot easier than access to other stablecoins. And I think there's concerns around necessarily holding a stablecoin like USDC that is, regulated in the US. But bottom line is, let's take dYdX as an easy example. When we were deciding what kind of collateral we wanted in our system, we went with USDC, and there are no liquidity concerns with having USDC in our system instead of USDT. And I would say that slowly in the industry, we see that progression away from, I think, USDT towards things like USDC. And then you've also got the decentralized stable coins like DAI and things like that. So that's all to say that, I think USDT still plays like a key role in the market, especially outside of the US, out of concern of potential kind of US regulations. But I don't view it as being frankly creating any kind of systemic risk to what is well, maybe 1.5 trillion or $2 trillion asset class now. It's a very small part of it.
Yeah, Phil, I agree with everything that Marc said. And based on those numbers, I think Tether's about 3% of the entire global market cap. And we lost $1 trillion in value over the last 7 days, and that didn't create systemic risk. So, what I like to think through is if Tether materially loses its peg, what does it mean, right? That means that traders will start converting Tethers into other crypto assets, meaning initially crypto asset prices are going to rise. Of course, traders are going to be suffering losses, most likely in that context. So I do think that we'll see prices then go down. But even if Tether went all the way to zero, which would definitely create an event, not a systemic event, but an event, who has counterparty risk to Tether? So it's mostly going to be retail traders and proprietary trading firms. And I also think it's important to separate the assets from the technologies underlying those assets, right, in that type of a scenario. So while crypto assets may ultimately go down in price until the market absorbs the Tether event, the technologies, so example, the Bitcoin and Ethereum systems, will remain unaffected.
Well, thank you both for that. Marvin and Rebecca, do you have thoughts on that? How important is Tether to your projects? And are there kind of viable alternatives should the need arise? Any additional thoughts you may have, Rebecca?
Sorry, 1 second. I wanted to check the yield on Tether today, at least on Aave, so I could tell you. I mean, in terms of its importance, what I'll say is I think stablecoins are really important for DeFi in general. It's that both USDT and USDC have some of the largest yields typically on Aave, because as much as there is a lot of interest in a variety of different ERC20 tokens in DeFi, I think having a peg to the US dollar, to the extent you can have it, is important in DeFi. And so that's what I'll say in terms of importance to DeFi in general, not just to Aave specifically.
Marvin, what do you think?
I don't have much to add. I agree with everything Marc and Colleen and Rebecca just said. I mean, big picture, I would love, I think potentially the greatest cryptocurrency could be the digital dollar, a Fed coin. And I do think that the US government is encouraged to hear that they're taking some steps in studying this, because again, it's better than the existing dollar. Other countries that we're competitive with are moving towards digital dollars on their end. And if we want, if you are an American or, are charged with trying to make America a great country while working in government, one thing you really want to protect and defend is the strength of the US dollar as the reserve currency. And, we would fall behind if the US government doesn't move forward with, I think, something like a Fed coin. Not everyone in crypto is in favor. A lot of people have a vested interest in USDT or USDC or DAI, but I think the competition would be welcome from a Fed coin.
I'm going to get back to you on that one, and I'm going to spring a topic on the panelists without first warning them, but I think that's a very relevant discussion that we should have. I will say, close out on the Tether discussion, I will say that I think, I'm actually personally kind of confused as to why the regulators haven't kind of stepped in and tried to do something about it. I think that the SEC doesn't know what to do with Tether, right? Because it's kind of critical to the whole ecosystem that they kind of are charged with regulating, that is being securities. And yet, it's clearly, from my standpoint, it's clearly not a security. So they don't have, immediate primary jurisdictional oversight over it. And yet, they're standing back and looking at the money services regulators who haven't done really anything. They're looking at the CFTC, and CFTC says, well, we regulate futures and options, and Tether is neither of those things, even though it's a commodity. And so, the New York Department of Financial Services and the New York AG has taken a role on this. But again, it really feels like a David and Goliath battle. And David, in this case, is actually the New York State regulator, and Tether's winning. Or I guess to put it more fairly, people just don't care about a lot of the allegations. So, there you have it. I do think that at some point we're going to have some sort of regulation here, but who's going to take the lead is the real question. And maybe it requires some sort of congressional action to kind of, appoint a regulator to be the lead federal regulator on this. So we'll see. I won't hold my breath. Okay, back to the topic I would love to talk about. And Marvin, I think this is perfect for you to just expand on what you talked about. The Fed coin, or the potential for a Fed coin. I'll be totally honest with you. I'm not quite sure how it kind of fits within the ecosystem. I don't even know what a Fed coin is actually, because to me it seems like it's not decentralized. I don't know who's going to run the nodes on this. Maybe various branches of the Federal Reserve or something like that to verify the transaction efficacy. But otherwise, it seems just like a centralized database for the government to keep track of your transactions, and to I think it merits huge privacy issues that we want to think about. And I guess to the extent of the project or the use cases, potentially there may be some financial inclusion issues from people that don't have access to the technology required to transact or interface with a Fed coin, and other things. The fractional reserve system of the federal government and of banks is going to be hugely impacted by something like this. The fact that you go to a bank to get a mortgage because they only need to keep a fractional amount at the Federal Reserve and lend out a levered loan to you, essentially. It's for which you only put down a certain percentage. So it's like a fractional reserve on a fractional reserve, and that's how you get those interest rates as low as they can. And the banks are still making money hand over fist. I think that's all going to be usually.
It sounds like a Ponzi scheme. It's
exactly right.
To regulate that.
But anyways, I'm taking enough of your time. I'd love to hear what your thoughts on this, please.
Yeah, so the real question is, how do you design a Fed coin, right? It could definitely be designed poorly as a tool for surveillance. Could also just be an ERC20 token, right? So there's a range of things. It could be a privacy coin, right? It could be it could leverage the technology under Zcash or Monero, and so the debate and discussion over what would this currency look like is one that I think societies, civil liberties groups, industry, banks should all be part of, right? And I know that in our space there are policy groups like Coin Center, Blockchain Association, the DeFi Alliance, that will be commenting, and they'll definitely be arguing for, trying to make the case for a Fed coin that does value privacy, right? Why would that matter? Well, the rest of the world isn't going to accept a centralized database run by the US government that has mass surveillance, that has complete surveillance, right? There need to be at least some privacy protections in order to even, I think, compete in the market, unless kind of every government coin and every regulation kind of goes in that direction. So the real question is, how do you design it? And a lot of the folks who are in favor of a Fed coin are people who would like to, we were just talking about how intermediaries are involved in essentially issuing money, right? Banks are kind of involved in like creating new money. if you're getting money from the U.S. government to the average American during a pandemic, or based on universal basic income or grants for people who have children, one way to get that quickly and efficiently to people, banked or not, is through a digital currency designed appropriately. And if you're moving, foreign aid, all of us who've read, books about foreign aid and how it's sometimes delivered in like bags of cash or whatever in different regions. There might be a world where you could actually cut down on a lot of the corruption in terms of some of the U.S. government goals in terms of getting money from the government to people who need it. So I think it's a question of design and a question of benefit and a question of use, globally and domestically. So I don't have all the answers, but I don't think we should assume it'll be a totalitarian centralized database, although that is probably the instinct of some people in government, not everyone in government.
Yeah, we should, next time we'll invite Edward Snowden to kind of chime in if he's available. Colleen, do you have thoughts on this? And Rebecca and Marc, please jump in as well.
Yeah, Phil, I go back to something that you said at the start of this, was how does a Fed coin work inside of these different crypto ecosystems? And that's something that I think about a lot. Marc mentioned that dYdX determined to use USDC as collateral. And I think it's important to keep in mind that all of these different ecosystems decide what assets to let in. And they're governed by different assets powering the ecosystems themselves. So if it takes the US government 5 to 10 years, who knows, to develop a Fed coin, is the Fed coin even welcome in these ecosystems at that point? I mean, the development in this space, it's happening at the speed of software, right?
Right.
It's so rapid. So do they want a USDC, a US Fed coin in there at that point? Is there room for one? Have we already moved past that? So those are the things that I think about too. But I'd love to hear Marc and Rebecca's thoughts.
I mean, I think to Marvin's point, without knowing the design, it's really hard to speak to this because it could take so many form factors. But what I do know, to jump on what Colleen said, is DeFi and just the crypto ecosystem is really good at finding ways to use technology. And ultimately, regardless of how the Fed coin's designed, if DeFi and crypto wants to use it within the ecosystem, it'll be used within the ecosystem, right? So easy examples of that would be, wrapping the Fed coin to bring it into DeFi, right? Like Fed coin doesn't need to natively interact with Ethereum for the Fed coin to be brought into the Ethereum ecosystem. Now, the question there that would be probably a little bit different from wrapping Bitcoin, for example, is do you want to wrap, let's assume, like a super centralized Fed coin in the first place and create risks in, the DeFi protocol that does that? And the answer is probably, if it's designed in a super centralized way, likelihood is we choose not to really have the Fed coin in that ecosystem. If we have a more decentralized Fed coin, which is pretty much impossible, it's not going to happen, then I think we'd find a way to bring it into DeFi. So I just overall say, like, there's no like stopping what this technology will allow us to do. It's just a question of whether there's a market for it and desire for it. And to be really clear, that's because you can have, some random person in, some country outside the US developing this technology that anybody can use, that frankly is essentially impossible to stop. So ultimately, I think the market will decide whether it's useful in DeFi and crypto in general or not.
Yeah, I don't have much to add off of what Marc said. It's just whether the design works or offers some benefits. And to Marc's point, if it doesn't, whether there's some other benefit to using it as collateral or something like that and going from there. But I don't think there's anything sort of magic until we know what it's going to look like.
Yeah, I totally agree. I think that, there's so many unanswered questions in this space. And unfortunately, we are dealing with a governmental entity that takes, forever to implement something like that. That's taken centuries to develop, frankly. And here we are, in a space that's moving very, very rapidly with private kind of equivalents, for lack of a better term, private equivalents that pretty much function as good as it can get. So, a Fed coin coming in, maybe that works from an institutional collateral standpoint, but I totally agree with you. I think that, this is something yet to be proven. I know people love to talk about it as if, that's just going to destroy the stable coins out there. I just don't think it's going to happen. All right. Well, thank you for that. And let's talk about traditional financial products. And if we think, now I know that this is somewhat of a loaded question given our panel, we think that the existing things that are coming out in DeFi are going to be a threat to traditional financial products. Are we there yet? Are we? Is the security and the trustworthiness of the products that are coming out, are we going to get to that point soon where it's going to be a real threat to traditional financial products? Rebecca, this was a topic I think you suggested, and I'm going to let you, start off on this. But I think we all have pretty strong opinions about this, so let's all jump in.
Yeah. So a threat to, taking down the entire legacy financial system, probably not. It's took a long time to build it, and probably, it is not going to be completely undermined by an industry that's about 2 years old in the next year or so. But I think that things are moving forward at such a rapid clip with DeFi, including finding ways to bring actors in the legacy financial space or traditional financial actors into the DeFi world. There's a lot going on behind the scenes in terms of technology being built that will allow these actors who are subject to various types of regulation to come into DeFi in a way that works with their systems. That I think it's going to move DeFi forward to not pushing out legacy finance, but just bringing in a new financial world into the old one in a much faster fashion.
I love that comment, by the way, Rebecca. I just have to say, because what I found from my experience in this is that it's the fact that the legacy financial products only trade during certain hours, during certain days, and has a lot of moving pieces in the background. I mean, just from an institutional perspective, you look at what happened with Citibank recently, where they transferred a large, I think it was $800 some odd million early prepayment to one of the lenders, and they kind of just by accident, and then one of the lenders would return the money back. Something like that is to me, like just mind blowing, right? I mean, how could that happen? And yet, there's a lot. Having worked in banking and finance and at a bank, I know what goes on. There is a lot of kind of manual moving pieces, and these fat finger errors can actually totally exist. And I know that DeFi is in crypto is kind of like not your keys, not your coins kind of mentality. But I think that there is an application, frankly, maybe on the institutional space where you can be more efficient to avoid fat finger errors and these sort of things. And if you do that, there is some sort of way to resolve the issue without having to go to the courts. Anyways, I added that piece. What about you, Marc? Do you have thoughts on traditional finance being threatened by crypto and DeFi?
Yeah, I mean, I think first we see kind of a parallel system arising, right? And we're seeing it take place now. And frankly, I think that's a good thing. It allows us to see which one works better, and which one, what the downsides are in each of the systems. But ultimately, I think I think the technology just helps deal with the issues that we all know about, which is kind of risks related to intermediaries. And so like one easy thing to get rid of is costs related to intermediaries, right? That's just an obvious one. And that ignores like the inclusion that you get from a technology that allows access to anybody, and things like that. But if you think about it, even from like a regulated perspective, and so you think, okay, well, inclusion, it might not be something that we can always achieve if regulators say you need to KYC people the exact same way that you do in the current system. Well, you're still going to achieve some other benefits. Here's an easy one: composability, right? So right now, anybody can plug into Uniswap or Aave and essentially use assets that are in those systems for the benefit of their ecosystem. And right, if you want a bank to work with another bank or any frankly traditional kind of institution to work together, you're not talking about days, if even that, of integrations, right? You're talking about weeks and months of discussions and figuring it out. Whereas, when you go to, Uniswap, you've got, billions, and Aave, you've got billions of dollars of assets that are available for you to use in your ecosystem effectively. That's something that ends up being, I think, very, very powerful. I think the other thing that's important, and Marvin can speak to this more, but I'll just mention it so that Marvin can speak more to it, which is I think what you see with automated market makers and what that brings. I think there's potentially a debate to be had on bigger markets. I think when you get to long tail assets, there is zero doubt that AMMs are better than anything that exists out there right now. It's a question of, traditionally you've had the question of, can I even trade this e-liquid asset? Now the question is only, at what price can I trade that e-liquid asset? And that is like extremely powerful when you have the ability to trade an e-liquid asset at any time. It's just a question of what the price is going to be at. Whereas typically finding a buyer for an asset is just extremely difficult. And so, I think those are some of the ways that I think we'll see kind of challenges to traditional finance once we kind of have that competition lined up clearly.
Yeah, I mean, to exactly Marc's point, and I was going to bring this up before, like even just seeing what happened over the last, let's say, 4 days / weekend in the crypto markets.
I can jump in. I mean, I'm just echoing what was already said, but when we talk about these being decentralized protocols, you should think of them more as SMTP or the email protocol. And anyone can integrate that. Anyone can build a Gmail, a Yahoo Mail, whatever. And so when people ask to talk to me and say, hey, we want a partnership with Uniswap Labs because we want to build some product based on the liquidity on the Uniswap protocol, I say, why are you talking to me? You don't need my permission at all. Just go build the thing. Don't you have engineers, right? And so I think, traditional financial institutions, right, one or two of them will figure out, hey, we can build stuff on top of these protocols. We can, and that will give them an edge, and that'll force everyone else to have to do the same. So I don't see it replacing. I don't see decentralized finance tools, most of them, replacing traditional finance so much as being yet another space where they compete.
Yeah, and I was one of those people that did that with Marvin, and because we realized, well, and I'm so glad we had that conversation, because on Wednesday it became really important that we had integrated to Uniswap on our own, and we were able to source liquidity there when the centralized exchanges were not open for business, but Uniswap was. And I do think that's important to note. Marc talked about the long tail of assets, and Coinbase right now has 108 different pairs. Uniswap, over 30,000. And just to put things in perspective for people too, I mean, if you had to say, if you looked at all these different DeFi projects as tiny corporations, Uniswap is on schedule to do 1.5 billion in annualized revenue for 2021. So at this point, I would posit that it's irresponsible if you are a traditional financial institution and you're not thinking about how DeFi is going to be an important part of your roadmap going forward.
Okay, thanks. I've been notified that I have 1 minute left. So I was looking for questions. I haven't seen anything. I will ask one quick rapid fire. Just give me yes or no. Okay, last question. Bitcoin ETF, is it happening in this year or next year? Colleen, you first.
Next year.
Rebecca?
I mean, no. If it's a yes or a no, no.
Marc?
Next year.
Okay. What do you think, Marvin?
I feel like I should have some disagreement in the panel, so I'll just take the aggressive position of this year.
No.
Okay.
Well, you can get a leveraged Bitcoin ETF just by getting MicroStrategy in your general brokerage account.
There you go. There you go. Anyways, my view is that we are at least until next year. Okay.
At least.
Yes, at least.
Yeah.
All right. Well, I think that's all the time we have. I want to thank all of you guys for coming on here. I know that, last week was tremendously busy for all of us. So thank you all for participating on this panel today and for the preparation that went into it beforehand and the feedback I got. It was very much appreciated. I hope you guys all stay for parts of other panels, or if not the whole event. So thank you very much. And I think I turn it over to you, Samana, but I don't know where you are. So I'll cut out here. Thank you all. Bye-bye.
Thanks.